So last week, Essco, which is a Boston-based equipment calibration company, sold itself to Transcat, which is a publicly traded company, and we represented Essco in the transaction. So it's pretty unusual for Oaklyn Consulting to be representing companies that are bought by publicly traded ones, though we do it from time to time. It's also, and the size of this deal is public, pretty unusual for us to be representing sellers in an $85 million deal, because our place in the market is doing investment banking work for people who can't access it. And normally, if you're that size company, you can access it. But in this case, a Boston investment banking boutique referred us to a Boston wealth advisor who was working with the owner of the company. And the owner's big stipulation was, I don't need an investment banker. I don't need someone to find me the buyer. I don't need someone to charge me a percentage of the deal. I only want hourly. And I've been trying to get that. In fact, he'd gotten several proposals from different investment banking boutiques. I've been trying to get that, and I cannot access the service. My lawyer says I need to have an investment banker on the team, but I don't need the thing that I think they bring. And that is get more buyers, usually, right? Our hourly approach to investment banking was what fit Essco's needs. And they ended up hiring us because there wasn't another option available. I should probably mention to viewers of this thing that we do not compete with our peer investment bankers. We are a resource when people need the service but can't access it. So what would we do if we weren't helping them get a new buyer? We helped the owner negotiate the last details of the letter of intent along with the lawyers. We focused on the business terms, the lawyer focused on the legal terms. We helped shepherd the financial and business due diligence after the letter of intent was signed. We helped the company's executives and owners who hadn't been through a deal before plan their part of the post-merger integration, a lot of details that really mattered to the employees and unfamiliar territory to them, but familiar to us and to other investment bankers. And we ran point on the business terms and the financial terms of the final legal agreements, which are also detailed and complicated. And for those who don't do deals all the time, you might think lawyers will handle all of it. But as a professional courtesy, lawyers on deals talk to the lawyers on the other side of the deals. They don't talk to, say, the finance people on the other side of the deal, or to the principals on the other side of the deal. That really is the role on the deal team of either the principals, if they've been through lots of deals, is to work out the business terms themselves, or it's the role of the investment banker. And so as you put together a deal team, and you're not a business owner who does deals all the time, that particular role of lawyers speaking to lawyers about the legal points, and the role of a finance person, usually an investment banker, speaking to the opposite finance person, are distinct roles, and they need to be done by separate people. And in the end, all those professionals work together really tightly as a team, the CPA, the lawyer, the investment banker. And so we filled that role in the final negotiations. So what happened? Well, the deal closed, obviously. It's in the news. It was announced publicly. It also, I think, importantly, did not go off the rails sometime between the letter of intent and closing, and it could have, and most deals could have. And the owner, who had started this business and had run it for many years, and this was going to be his one deal, the owner made this decision with confidence and had a sounding board the whole way through. So deal closed, didn't go off the rails, owner closed with confidence and feeling good about what was going to happen next. That's what I think we brought to this deal, was really sensible investment banking advice at a time when it was not otherwise available in the market for a company that, despite its size, was not getting the kind of help it wanted as they went to go interview our peers.